About entries today. POI is an entry. What's POI? Anything can be your POI. POI means point of interest. POI means point of interest. Point of interest. And anything can be your point of interest. Okay? Give me a minute, please. Anything can be your point of interest, and entry is entry. I don't know how to explain entry. That one is just normal English word. But POI is an abbreviation for point. P for point, O for off, and I for interest. So anything can be a point of interest. Now, if you check on that free channel, you would see that I usually drop trade idea for them. I don't drop signal for them. What I drop is my point of interest. For example, let's just say this is Sabi Girl USDT. I want Sabi Girl USDT to sell at this point. To start buying from this point. Now, I won't tell them that it will buy here. I will just say that I am focusing on this area. This area. Now, this area becomes. People can hear me. Okay. Now, this area becomes my point of interest. Doesn't mean that this area is where I am entering from. Now, basically what I drop in that channel is just a trade idea, my own point of interest, but not my exact entry. Now, your exact entry is different from your point of interest. Your point of interest is where you are going to enter from. Your entry is where you're going to enter from, while your point of interest is where you're looking out for. You want to see a reaction from that particular place. Now, we'll be talking about point of entry as a whole, and not just point of interest. If you check in that Telegram channel, I told them that I will join the buys on Monday if price should close above here. Now, why did I say that? I actually do want price to close above here, but with the body of the candle. Why? Because if that happens, it has confirmed a break of structure, a proper break of structure to the upside. If we put this disruption, we're just giving an instance. So this was swept out. So now we have this as the inducement, and this as the disruption. And you remember what I taught you? I said when the disruption is taken out with the body of the candle, we look out to buy. In this particular trend, we look out to buy. Now, somebody was asking about the failed external that I was explaining. Now, when the failed external comes in, you know that it is 3 internals that makes an external. Now, if it is not 3 internal and it is 2 internal instead, that particular internal, that particular point is called a failed external. Which means that, for example, if this was where is the failed external, this high here will be called a failed external. But those 2 internals that are inside here are valid to be traded as inducement and disruption. But the major high is not an external. Any other external that is valid after this is the valid external, and these other ones are just internals that are valid inside the failed external. Then what about if it's in a case like this one now, that we have a valid internal here? I think we do. This is the highest high here, this one, but then we had this guy that went above this guy, making it a dual structural liquidity. So this is making it an internal, a valid internal inside this. Now, this guy is a valid internal, fine. In this case, this is a valid tradable internal, okay? But in all, this is the valid disruption. There's a difference between having a valid internal and a valid disruption. This particular one now is just a valid internal, but this is the valid disruption, like what actually, because all of these are one leg. If it was two, then we would have called this a failed external. If this thing was two, let's go straight to today's topic. So we're talking about key levels. Now, what are key levels? Key levels are zones that we want to see price react from. Okay, they are zones that bounces price action. For example, if this is a key level, we expect to see, key level is one of the everlasting, not like everlasting like it will be there forever, I do not know. Of course, I'm just 21. What I'm just saying, everlasting is for the time being, for a very long time, this key levels has been one of the entries that has lasted, even while they say others lose their own consistency. You know that after sometimes most stuffs lose their consistency, but they still work. That's why people that trade whatever they trade, they say that this still works. But the consistency of the earlier time, that's why people keep learning. Okay, now for a long time they say key levels have been working for a long time. Now key levels are simply like zones where we expect price reaction, either a resistance or a support. Now we have types of key levels. We have the support level, we have the resistance level, and we have the support becomes resistance. Either support turn, either support becomes resistance or support turn resistance. Anyone. Let me just put support turn resistance. And we have resistance. Even if it's only key level we do today, glory be to God. I wanted to talk on mitigation block as well as this key level, but I don't know what's the time. It's 8:45. We did not start very late. Now we have support key level, we have resistance, and we have support on resistance. Now in that basic market structure, you were told that wherever price keeps tapping like this, wherever price taps, I think I said 3 times, that place becomes a support. Fine, that is on them. But now this particular support that we are talking about in key levels is quite different. Now we have, I'm going to still make it like structural liquidity the way we did. Now this is not what it is called. As a matter of fact, it doesn't have a name, but I'm going to put it like this so that you guys can understand, please. Okay, please tell the people that are chatting in the Telegram group to follow up the class. Okay, they should follow up the class and leave all this talk. Okay, let's continue. So now this particular key level, we are going to group this support and resistance key level. We're going to group it into 2 parts. We're going to make one series support. We're going to make the second one we're going to make it a series support and dual support, and we're going to make it series resistance and dual resistance. We're also going to make it series support on resistance and dual support on resistance turn support, series and dual. We're going to make it series and dual for all of them. Sorry, I'm not really feeling very well like that. I just have to just take up this class because I don't like postponing class. It's just piling work for me. So that's why, by the grace of God, I'm fine. So we're going to group them into 2 parts. Hope you are writing. I know some people have stopped writing by now. They don't even know where the notebook is again. Now we're going to talk about the support, dual support first before we talk about the series support. Then we'll now go to dual resistance before we talk about the series resistance. Then we'll go to the dual support or resistance before we go to the next one, and then we go into the chart to look for all of them. Now we have this guy here. We're talking about the support first. Now what is support? Let me try to define it for you. You already know the basic market structure. I'm going to put it in a layman term. If you want to climb up, you need a ladder. Support, that ladder is your support. Fine. If let me explain resistance. If you want to come down and then something is like if you want to go up and something is blocking you, that's a resistance, and support is what assists you to go up. Okay, so basically what support is what for buy and resistance is what for sell. Put it that way. So now let's get a chart example of support. Now dual support is made up of two. This way we have the one that is made up of 3 candles as well. All we need is the first candle and the second candle for the body of these 2 candles to close on the same line or slightly the same, not a noticeable difference, because sometimes I use something like this, but not a noticeable difference. Okay, like this. Then we have the next candle and the next candle keeps going down like that. Now this is our support, this is our entry, this is our support, the SL above. This is for dual. I'm just talking about the dual where it just involves 2 candles and then like this. Then for series of these supports, we have when it has to do with numerous candles, a lot of candles. Like so many candles, walking. And then we have this guy here. After that, we now start having too many candles before it breaks structure. Like it gives us that major break or structure movement. You know, when something gives a major break or structure, there is a very big difference between this thing here and this thing that happened here. As usual, this is a support. Okay, now this one here is dual, this one is series. I think as I'm explaining, I should just show it on the chart so that it won't take very long. Now let's look for the, and mind you, these particular key levels, they are continuation entry models. What are continuation entry models? They are entry models that are used after price must have tapped into the zone. The next class we'll be having on entry, you will know what is the main definition of tapping into a zone. Not like you will see this thing at disruption and you say this is your entry. No, this is a continuation model. It means that price must have reacted from somewhere, and that is why you are continuing with this. Example, let's go to Solana. I will come back to this guy. Let me save him. Let's go to Sol. That's crypto. So it's not here. Anyway, let's continue here. We'll see, get the examples here. Now price must have tapped into something, or like a disruption must have happened. Let's use this gold for an example. The first time we had this class, gold was around this place or so. Then I told you, I said this guy is not a valid guy. The person that is valid is this one and this one. Okay, then our disruption happened here. Now after a disruption occur, you are free to use a continuation entry model after a disruption. Why? Because it has cleared a zone. I do not know if you understand me. You are free to use a continuation model. It's just like saying tapping into a zone. It either clears a zone or taps into a zone for a continuation to occur. Continuation is price just flowing in a trending market. You were taught your ranging market, your trending market, which is your uptrend and downtrend. Now when the price is on a particular trend, like it is on a downtrend, lower highs, lower lows, lower highs, lower lows, that's a trending market. After the disruption occurs, now this is a reason, you have a reason to take a continuation model. It's not that a disruption has not occurred, you now want to like buy here, because as a matter of fact in TLS we do not trade directly. Only the stubborn-headed people in TLS 1.0 that usually like to like when it fits their own. You know, when you trade, after a while you start getting familiar with some things that you were not taught, and you are free if it works for you to stick to it. Okay, now after the disruption, inducement disruption, now you are free to take a continuation model after a disruption. Now we had a what's this guy? This is a dual. Yep. This is a dual key level, a support over here. You can see that this thing looks like this one I drew. Where's that guy? Okay, it looks like this. It doesn't look like this other guy over here. Seems like we're going to do only support key level today, because key level is even like I've not even got into resistance. I've not got into this other guy. It's almost 9. Now we have this one here. This different from this, so as this one. So let's look at it closely. After the disruption occurred, price created a support. Look at it here. Let me highlight it. This is the support price created. If you check, these two candles have their highs are on the same level, and as soon as that occurs, price has to, when this first guy closes and the second guy closes on the same high with that guy, the most important thing is price has to close with the body of the candle, that particular candle that is making it a complete support. Those two candles, price have to close with the body. Then after that happens, the next guy is now your own entry, the next guy that is forming. So now we had this guy form here, and your SL you also have to be above the two candles, because those are the two candles that makes up your key level. Except this candle is very big and you just cannot, so you just have to like use 50% of the longest one. If this one was like around here, what I will do is just like to use, either I use my brain to measure it or I use whatever. I'll just like measure it like this, just put my SL just above 50%, because how would I put my SL above here? Instead I'll leave the trade. If I know that the SL is too big, I'll just forget about it. Better safe than sorry. So but yeah, for this guy that it's not like that, so we are privileged. Like I said, this is just a continuation model. So now you also have to be above this candle. And then what happened, if you look closely, after that, what happened? Price created another key level. Let's check out what key level did price create. Price created a Mount Broker. This guy, they were on the same line. That's why I told you that all this if it's slightly on the same line, you can use it. But on my own, because brokers like doing their own shit. But let's just forget about that guy, since they're not on the same line. Let's use this one. Now this other guy, this particular key level, I personally, if as a beginner like you people, I will not advise you to take a key level from the point where price did not break the low that caused that key level. Because like what I taught you, if price breaks this low, it is now simply making this thing here, this place, to be a strong high and this a weak low. But me, I just took the risk because I was already in. So what can happen? Because after all, I was already in this guy. So I felt like it's either he validates this whole guy or nothing. Fine. So I used this guy. I won't even lie to you. That's why. So fair enough, it triggered. I posted all these stuffs in that free channel. So now this is your new SL. Price came back again. and gave us another entry. The same weak entry is still weak because he did not break this structure. He did not break this structure. That's the truth. He did not break this structure. It was this candle that triggered it and came down that broke it. All these things here are weak, so it's almost like nothing is there. Weak is nothing. But as God may have it, because initially he already created a disruption, so he has to sell, even if just like 200 to 300 pips, he just has to sell because he created a disruption. So at least even if before he takes it out again, he has to like sell. That's the confidence I had in these guys, because I knew that after disruption something has to happen. And then we had this sell again. You know why you get lucky with this guy? Because I say your SL has to be above this guy, and my target was 3 something. I think 3-1 or so, and I was lucky, and that was it. So the support key level is actually very simple. You just have to close like this. Okay, now let us look for a key level that looks like this key level. Now this one is the series key level. This particular one that occurred here is a series key level. I do not know yet if I will trade this. The reason is because they may likely want to start buying from here, and as a matter of fact, price is just opening on Monday. We don't rush into the market like that. But would have been best if this high was taken out with the body of the candle. You can see what they are doing. It's all wicks. And to confirm a key level, this high, it is the next candle that follows suit that's supposed to break with the body, not the next one that comes, because we have what we call fresh and unfresh key level. Now a fresh key level is the one that is untampered. Let me give you an example. If as this candle is now, price now break structure with this next candle with the body, but already broke with the wick, this key level has been mitigated with the wick. For example, like this now, if there is a wick here, it has been mitigated with the wick. Why I'm skeptical is because I feel like it might start buying from here. Okay, it might start buying from here. The reason is because why? This is a valid key level, but my problem is that why did you not close with the body of the candle here? Now on fresh key levels, price, there is an interference in an unfresh key level. That is the difference between fresh and unfresh. For example, this one over here is an unfresh key level, but unfresh key level still holds, but I don't like taking them. They have very low win rate. For example, this one now, you can see the price closed with the wick before the body and it did not hold. But as a matter of fact, what would we have been doing here? Maybe trying to sell, but if there is any key level that's supposed to hold that actually failed, I think it should be this one, because this is a valid key level. This particular one is so valid. This one here, okay, now I see. This was valid but taken out. Now I see. Alright, so we have the fresh and unfresh key level, and we also have the support and the resistance key level. Now we are finished with the support. We have to go into the resistance. We still have how many? 1, 2, 3. Okay, so don't forget, I'm still going to drop a PDF. If not a PDF, the one I wrote by myself on fresh and unfresh, I'm going to drop it. I already drafted something for you guys on this fresh and unfresh key levels. The unfresh has price interference. Let me look for unfresh key level to use to give at least one example. Let me look for one. Okay. Oh, did I get any? Okay, I think we got this one here. This is unfresh, but unfresh works very well on BTC. Oh, I don't know why. And as I told you, the SL, this is the appropriate place for the SL. But if it's too long, you're free to take 50%. But even if you get taken out, please note that it's your own personal loss, not the market, because where it validates it is the two candles taken out. So you can see, if you take 50% here, I'm sure that you are out. But we have major invalidation, is just the two candles taken out. So instead of you, if you cannot risk it, just forget about it. But this is unfresh. Like I said before, I do not like trading unfresh because it has low win rates. It's just like saying that something has tampered with something that is supposed to be very genuine to you. Okay, this would have been better, but price has tampered with it here, not just there, here. If it just broke with the body and no weak interference, then fine. Okay, so this is unfresh. Now let's talk about this one we are talking about. Let's talk about the support. This one we have been talking about is the resistance. So it's resistance. Hope I've not been calling it support, sha. I told you resistance is okay. So let's talk about the next one. Let me still draw a diagram. Okay, now this one that we're talking about, I'm not going to talk about this resistance yet. I want to talk about support turn resistance before I enter resistance, the resistance turn support, so that we're not going to confuse ourselves. So you just get the understanding of. Sorry, I'm taking your time. Okay, he said I've been calling it support. My bad. I'm really sorry. It's not. Like I've told you before. Sorry, that's a personal mistake. Like I said before, support is what you use to climb up. I used ladder as example. Resistance, something that bridges. So if we are selling from here, then definitely it is a resistance and not a support. Support is to go up. That's a mistake. On my mind, I thought it was like I'm talking about the support turn resistance. So now we're going to talk about the support turn resistance. Now what's the support turn resistance? It's simply saying that the support initially did not hold. For example, now if you remember, I said something. I said this guy. What is that guy? Okay, this guy is a valid resistance, right? This one we're talking about now is resistance turn support. Now this is a valid resistance. Now how can this resistance turn into a support? Price has to fail in that resistance, and why price is failing that resistance, it has to close with the body of the candle. Everything we are doing has to be the body of the candle. Now we have, I'm still going to put it to the dual and the series, though there is nothing like that. I'm just putting it so you can understand. Now I'm going to draw this one. I drew here is the dual. I'm going to draw the series. You know, initially this would have been what, a resistance over here, but the moment price breaks above it, it is no more a resistance. It is now called, you know, this one has break or structure. It's now called what? A support. Mind you, it should not be mitigated. If this candle taps on it, mitigation means like price invalid. You know, not really invalidation though. Price can mitigate it and not invalidate it, because like I told you, people still take it. So let me just put it this way. This guy is here, and then price close above this guy. No, these are series, too many. Not meaning of series and dua. I explained it before in SLQ. So now we have this guy as the dua, this guy as a series. This one involves too many candles, and this one involves. I wonder those people that are chatting in that group, like, are you not following? Are you not following what they are doing? Who is talking about flirting? Where did he flirt now? You guys are very funny. A lot of misplaced priority. I don't know. Let's continue. Just stop distracting my notification. That's the thing. You're diverting my attention, so I don't make mistake again. No. This guy now is a resistance that turned into a support. A resistance turned into a support is simply a failed resistance. It failed to hold price below, but this particular one has to happen in an uptrend. That was why I wanted to use Solana. Solana is not here. I wanted to use Solana to explain, but it is not here, because that's a very, very, very good example of what I wanted to talk about. I don't want to roam about, but that's a very, very nice example, and you can see the way price bought. I'm looking for a clear one. I wonder why these people don't have Solana on this that derive. Why? It's not there. It's not there, unfortunately. But let's just proceed. I think I dropped the chart. Can I get it here? Okay, fine. I think, sorry, I'm coming here. I just want to show you guys from this place. Oh my god. Okay, I'm using this so that I can explain, because I'm not getting the Solana chart here. Seems like it doesn't want to do. But if you can strain your eyes a bit, you see this example here. Now this first candle and this second candle, it closed above. They are on the same line, which is what a support. But this is an uptrend. Like I said, when you're trading a resistance turn into a support, make sure it's an uptrend. When you're trading a support turn into a resistance, make sure it's a downtrend. Then when you're trading a normal support, make sure it's on a downtrend. Yes. Then when you're trading normal resistance, make sure, when you're trading normal support, it has to be on an uptrend, because that's support buy. When you're trading resistance, it has to be on a downtrend, so you don't mistake. For example, if you were taking a sell here, you definitely take a loss. So trading, first of all, there is nothing like entry. If your structure is wrong, you will take multiple SL and you ask yourself if the strategy is working. So if your structure is wrong, your order flow is wrong, your entry will fail every day. So take note. Not because you saw this, so because this is a resistance, not because you saw this resistance, but price will react from it. But holding is a problem. You can see there was a reaction here, but did he hold? No. So you see this guy here, because it's in line with price movement, he held. As you can see here, he held. Likewise, this guy, this is a support, not a support on resistance. This is a support on its own, and then price mitigated it. Now why am I showing this diagram? Because I want you to see this buy that happened here. It happened because this is a support, this is a resistance that turned into a support by what? By failing. But it has to be in line with price movement, the trend of the market. Okay, now we have this second guy, which is the series. It's just like this one here, over here. If I am to choose, which I'm really skeptical, I would say I would expect price to rather take this guy here than, okay, there's even another valid guy here, so this guy is is not even valid at all. Now, one thing you should take note, the rule of continuation entries, whether it is this key level or mitigation, when I teach you, the rule is that once one fails, the rest, let's say for example, as I was selling here now, just as this guy failed here, I have no business selling from another continuation again. If it shows up, I have no business selling for another continuation. That's one thing. That's the rule of any continuation model. At that point, price needs to react from a zone again. Remember when I said from the beginning that price needs to react from a zone. Price needs to react from a zone. If price is not reacting from a zone, do not take it. Either it's reacting from a zone or it's clearing a zone, among the two. And once one continuation model fails, whether it is this key level, whether it is mitigation block, once one fails, just forget about taking the next one price shows until it reacts from a major zone, either from an inducement, a disruption, or it is clearing a disruption. Clearing inducement doesn't mean you should start. Let's say price clear this inducement now, you want to start buying. Clearing inducement and buying is your own risk, because why? Inducement is not change of character, so price can clear this inducement and come down to disruption. So if you buy here and you take a loss, it's your own problem. I did not teach you that. Okay, so I've given the example of this guy here is a resistance that turns support. This one is a resistance. This one here is a resistance that turns support in the series. This one is a normal resistance. It did not turn to support or whatever. It has to be in line. You see all the trades I took, they are in line with the structure. After they got taken out, you did not see me rushing to take any trade. I did not take any one. So they have to be in line. This one is the series support, resistance rather. The series resistance still on the same line, or it can just be slight different, but majorly not something noticeable. These are continuation models. If you see this one now, it might look like structural liquidity to you. It's actually a structural liquidity, but it is a continuation model, so it is tradable, not as an entry, a major entry. It means that price will probably have tapped on something and now you are continuing, or price cleared out something and then you are continuing. Okay, what's the time? 9:15. So we have talked about the support, the resistance, and we have talked about the resistance turn support. I've also talked about, have we talked about the support itself? Okay, yeah, we did. There is no, this particular MacBook, there is no trading view here. It's just, I use this one to analyze just derive. There's no trading view like normal trading view. It's not here. It's in my other one. It's not here, and I don't use that one to teach. So like I said, it's actually very simple. You just have to pay attention to details. This is like a brush of it. In the next class where we'll talk about, I think what's the next topic? We might not take that next topic. The next topic is stacking and confirmation base. We're not taking that until we are done with all the entries. We might even remove this question and answer. We might even remove it to turn to entries, because we still have to talk about SBI, which is, actually wanted to remove SBI because of the low probability of it, but I'll just teach it because some synthetic pairs it works for it. Then SBI, we have mitigation, and we have normal demand and supply, which is still SBI anyway. So in the next class, but if there's anything you should take notes in this particular class, fresh and unfresh key levels. Unfresh key levels, the ones that have been tampered with the wick of the candle before price broke with the body. That's unfresh. Fresh is these ones that I gave example of here. Another thing you should take note of: do not trade continuation model as if you're trading from a zone. allow price to react from a particular point first. Very important. That's why it's called a continuation. It is continuing from what has initially started. It is not starting it itself. These entry models don't have power. This particular continuation entry model, they don't have power on their own. Price needs to be trending. What do I mean? It needs to already be buying or selling, or it took out the sellers and you want to start buying, like that. And then we have the support that turn resistance, support that fails. If the support fails, it turns into a resistance. If the resistance fails, it turns into a support. And a resistance that should turn to support must be on an uptrend like this. A support that should turn into a resistance must be on a downtrend. The diagram of a support that turns into a resistance. This is supposed to be a support where you should buy from, but price failed it, so it has to be on a downtrend. Price failed. This is the one for DUA. Price failed it, and then what? You now start selling. A very good example is this one here. Then for series, the same thing. It's just too many candles. For example, if you want to make this one series, price just have to what? Take it out. You're supposed to buy from here, but then what happened? Price flipped it, and then what? Was selling. Simple as that. Resistance that turned into a support, we are buying. A support that turned into a resistance, we are selling. A normal support, where's the guy? A normal support, we are buying. A normal resistance, we are selling. As simple as that. This is what makes up key levels. We are not done with key levels yet. The next class we'll talk about it briefly again. To wrap it up there, we'll talk about mitigation, block entry, and the rest of it. So thank you. I'll be dropping the video just immediately. See you in the next class, and please always ask your question in the question place. Stop confusing people. That particular place was not created for fancy. Ask your questions in the appropriate place so that